Real talk for a second. If you've ever hired a bookkeeper and thought, cool, they just log in and magically fix everything, that's not how this works. Because here's the uncomfortable truth nobody tells you in the first 5 seconds. Most bookkeeping files are already broken before we ever touch them. And today, I want to walk you through exactly what our onboarding process looks like, why it takes time, and why skipping any of these steps is how businesses end up with numbers they don't trust. Think of this less like data entry and more like a full diagnostic on a car you've been driving with the check engine light on for 3 years. So part one, the messy reality. Let's start with the myth. The biggest myth in bookkeeping is that QuickBooks equals clean books. It doesn't. QuickBooks is just the filing cabinet. If someone's been stuffing papers into random drawers for years, yeah, the cabinet didn't cause the problem. Most businesses come to us with missing transactions, accounts that haven't been reconciled in months, balances that technically exist but make zero logical sense. So before we fix anything, step one is accepting reality. We're not optimizing yet, we're investigating. Step two, getting full access. First things first, we need access. We connect to QuickBooks Online, and we ask for view-only access to bank and credit card accounts. No moving money, no scary permissions, just visibility. We also make sure contracts are signed because, slight sarcasm here, doing financial surgery without paperwork is a bad idea. Once access is in place, we don't just glance at the books, we physically review the entire file. And that means asking questions like what software feeds into this, payroll systems, bill pay, project management tools, PayPal, Venmo, Stripe, mystery apps no one remembers signing up for. If data touches money, we want to see how it flows into the accounting system because broken integrations cause silent chaos, and silent chaos is the worst kind. Step three, finding hidden problems. Now comes the most important part, finding what's wrong. We go account by account, bank accounts, credit cards, PayPal, Venmo, anything with transactions. We ask very unglamorous but very important questions. How many accounts are there? How many transactions never made it into the ledger? When was the last reconciliation? Are balances even pointing in the right direction? If a debit account has a credit balance, that's a red flag. If a credit account has a negative balance, also a red flag. If an account balance is technically possible but wildly unrealistic, yep, red flag again. We document everything, screenshots, notes, a full issues report. This is the but here's what nobody tells you moment. Most of the value happens before we post a single transaction. Part four, fixing the foundation. Once we know what's broken, we fix the foundation. This starts with the chart of accounts. We compare their setup with what actually makes sense for their industry. Because if your accounts are structured wrong, your reports will lie, even if every transaction is correct. Then we adjust equity accounts to match the most recently filed tax return. We check when taxes were last filed, whether the business is accrual-based, whether taxes were paid in cash. Small variances are normal. Massive differences are not. From there, we post missing transactions, fix transactions posted to the wrong accounts, match payments to the correct invoices, reconcile every account properly. Then comes the time-consuming stuff, accounts receivable. How many invoices are actually outstanding? Accounts payable. How many bills are real and how many are ghosts from 3 years ago? This part isn't sexy, but it's where accuracy is earned. Part five, the clean finish. Finally, we review everything: balance sheet, expense accounts, making sure every account is in the right bucket and tells a coherent story. And when we're done, here's the real win. You're not just caught up. You actually understand your numbers. You can trust your reports. You can make decisions without guessing, and your books stop being a source of stress and start being a tool. That's our onboarding process. Not flashy, not rushed, but thorough, because clean books aren't built by shortcuts. They're built by doing the boring stuff correctly in the right order. And once that foundation is solid, that's when bookkeeping actually becomes useful.